What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Carvana, ticker symbol CVNA, on a variety of time frames in anticipation of the next trading day, Monday, February 5th. Well, Carvana stock on Friday finishing the day with a nice late day pump, up 2.16% or 92 cents a share. Now, right away here, since we are looking at the 1-minute chart, I just want to start off by taking a look at a few intraday movement pieces here that I noticed. You can see here nice rejections off of the 2 standard deviation band away from volume weighted average price. You know, guys, I think of TA as a total self-fulfilling prophecy, but that's why I love it so much. That's why I look at it. I mean, every day we're making these videos, right? It works because people believe that it works, and then their actions follow that belief. So I think we saw quite a few intraday scalpers perhaps taking short off of these upside tests. For me, it was a little bit of a tight channel, a little sloppy, kind of early rejections, right? But I know that we saw a lot of traders taking either side, whether they're trading off the 50 period, which for me, I prefer to trade off of reversions to the mean. But either way, a highly interesting morning here on Carvana stock on Friday. By the way, if you guys want to get scalp setup alerts, my personal scalp setup alerts, unusual options activity, maybe even you want to become a platinum one-on-one member, the link to check that out is in the pinned comment. Let's move on now to the 5-minute chart and take a look at volume, okay? Because volume is a big indication of how traders are feeling about a particular move. Really interestingly on Carvana here, I mean, this is textbook. You have a bit of a fade into the open, okay? After the open, you get that pump back upside on big green volume, all right? You see volume die as the stock consolidates. And then with this big late day or late afternoon more so pump, increasing volume, and then volume dies again during the pullback and consolidation into the close. Listen, that is textbook bullish movement. Not to say that the bulls can't be wrong, okay? But understand that when we're looking at volume, you want to see as much volume as possible when the move is in your favor, okay? And then you want to see low volume pullbacks, you know, when the stock's going against you, or if you're a bear, it's vice versa, okay? Let's now look at a more contextual view of the day-to-day perspective here on the 30-minute chart with the big, very popular 50 period and 200 period moving averages. By the way, again, that's the only reason we're looking at them, because they're highly popular and people make decisions off of them. A really, really big deal here on Friday. We saw a reclaim of both the 50 period and the 200 period moving averages. Now that really is a great sign, because for the last couple of trading days, we were seeing these acting as, you know, potential areas of resistance. So to reclaim in the last half of Friday, both of those and hover above that, I mean, that's a good thing to see if you are bullish. But moving forward here into Monday, if you're a bull, you want to see obviously both of these holds, the 200 period holding as a potential support area if we do see a back test, okay? But if you're a bear looking at this 30-minute chart on Carvana stock, you are looking at this with one thing in mind, and that's break back downside beneath not only the 200 period, but also that 50 period. Get back beneath there in order to make a downside test back toward 40 is what a lot of these bears would be thinking. 41.25 I've drawn as a level. That is an old level, but also paying attention to that as well, okay? Across all time frames, not just the 30-minute. Let's now take a look at the 4-hour chart here, get a little bit even more contextual with a variety of time frames. You can see here that 50 period, that white line, is currently very much so in play. So come Monday here, I'm going to be looking at that very, very closely. Again, if you're a bear, you want to see an upside test and a fade there, right? A pull away from that area, a fade off of that, claiming that or more so reinforcing that 50 period as an area of resistance. And if you're a bull, you want to get up through there, retest, reclaim it as support, and then pull up away up toward 45, and ideally through 45 up toward that 200 period moving average that has recently been treated as a level of resistance. Also here on the 4-hour chart, you can see that this 41.25 region has been a level to watch. Again, we drew this line a long time ago, and it's, you know, continuously being treated as an area of support. So I am also paying attention to that big time here on a downside test. Again, if you're a bull coming into a test, obviously you want to see 41.25 hold hard as a level of support. And if you are bearish, get down through there and reclaim it as a resistance level to then see a fade off of that lower to the downside, ideally if you're a bear. Okay, let's now look at the most important chart of all on any stock, but you know, Carvana as well here, especially right now. Remember, we have earnings coming up here on February 22nd after the market closes. Not immediately relevant, but in the weeks coming into that, we will likely start to see a little bit of volatility, taking that into account. But right now, the really obvious thing to watch, look at this. The 50-day moving average here on the daily chart is immediately relevant. We're essentially testing this. So listen, if you're a bull here, as we come into this test of the 50-day, that white line, listen, you want to see us break and hold that, ideally get up above 45 and put some distance between the stock price and that 50-day moving average that's currently acting as a potential resistance. And hey, if you're a bear, number one thing on your mind is fade as hard as possible away from that level, right? Continuing to respect that as a resistance level. Ideally, if you're a bear, getting down through 41.25, okay? Just for reference, that 200-day moving average is currently sitting right around 34.35. And if we do look at implied volatility here, I think it's important to take a look at that. You can see, there we go. You can see that, you know, looking at the last couple of years, it is relatively low. And then if we zoom into the more relevant time frame, we're actually sitting in the mid to high range, depending on how far back you want to go, depending on when your intended trade time frame is. For example, if you're looking at a trade, trying to put one on for the next 2 months, you're not looking at the last 3 years of IV, right? You're looking at the last 1 to 3 months of IV, and where do we sit currently in relation to that? Ideally, when you're buying options, you prefer implied volatility typically to be as low as possible. And if you're selling options, you'd prefer that to be as high as possible, ideally. Now let's finish up here. I want to see what the options traders are thinking. We can get a lot of great data from the chain here. 91,300 total contracts traded. Okay, understand the sample size is a little lower than I would prefer. We're of course still going to look at it, but maybe just take it with a grain of salt since the sample size is a little low. Look at this though. Total calls, 69,500 total calls, 21,700 puts. This is leaning more than 3 times to the call side here on Friday, right? Heavily leaning to the bullish side, overall call put ratio. And that short-term speculation, 0 to 20 delta range, the much shorter term contracts, what are those short-term traders thinking? Over 40,000 calls and just over 10,000 puts. We're seeing almost 4 times the amount of short-term bullish speculation compared to the short-term bearish speculation. But as always, consider the traders can of course be wrong. Before you head out, please leave a comment. Let me know what stocks you'd like to see me cover here in the near future, even if it is just more Carvana. That feedback helps out tremendously, and I'll see you in the next one.